I was having some issues with my microphone and headphones and that's the thing. So it's all good. I'm fine now. It's okay. Like, welcome for Marty to continue because mine's actually not very long. Mine's just more of an introduction to a questionnaire that I am going to make available for people. So, yeah, if people are wanting to listen to Marty and then I can make the presentation and the questionnaire available, that is fine with me.
We are done, Katie. You should start.
Yep. Okay, no problems. Surprisingly, what I'm actually talking about answers the question earlier about the mindset between Forex and shares. It's realistically, there is, I don't know if there's more of a difference between mindset or whether it's about the different aspects of what you need and want from your trades, whether there's a difference between Forex and shares. Sorry, was that okay, Partha? Did you want me to answer that or?
No, are you sharing your screen? We can't see your screen.
Oh, okay. Sorry. It's a new computer.
Yeah.
Trying to figure this out at the moment.
The up arrow within the square in bottom.
Okay. Can we see that?
Yeah, it's coming. Fantastic.
Okay. So it actually really different to the question. So it sort of relates to it. The mindset is pretty much the same. It's just more the risk tolerance and different things like that that makes a difference.
That's a brilliant saying. Unbelievable.
All these things coming up here. So.
If you were distressed, yeah.
And realistically, it's exactly what it means, is that there's a lot of things that can affect different things in the market. There's economic factors, there's all sorts of things that can happen, but ultimately it's your psychology that determines what you do with that and how that affects you in your overall trading. So a lot of people think that their trading strategy and their trading plan is enough, but it's actually not. It is a lot of different little bits and pieces that come together, and your trading strategy and plan doesn't always incorporate everything in a cohesive plan or a cohesive flow. It's, a bit of psychology and a bit of, what sort of market analysis and a bit of different bits and pieces, and nothing sometimes is a flow of that bigger picture. So it's actually going to be the next 3 sessions that I do that will explain all of this. So it might seem a little bit weird and a little bit difficult right now. And I have to say philosophy a lot. So I'm really hoping that I don't mess that one up. So when we look at our overall trading, we're looking at our philosophy, obviously, which really we're looking at our beliefs, the things that help us with our decisions, how we interpret the market, the way we decide what's a really good opportunity, what's not an opportunity, how do we decide for ourselves what is the best risk management strategy, and our own personal strategy itself. How do we adapt to the market? Do we decide to learn, and what do we decide to learn? And to what degree is our emotional discipline required, whether we're okay, whether we need more help? with our methodology. So our methodology isn't just our strategy, it is also encompassing other things as well. So the methodology is influenced by our philosophy. It's the actual techniques that we use, the principles, the methods. So you could be wanting technical analysis, but there's particular types of analysis that you use that you favor over other things. It is what gives you that structure and discipline that you need to be able to stick to. And once you get rid of all emotion, you will either make a loss, not make a loss, but you will actually have a good trade, because a good trade doesn't need to be a profitable one. It just needs to be one that follows your plan. And your behavior is not just, it is your observable actions and your decisions and things that you can actually judge externally, but it's also the emotions and the psychology, physical processes that happen if you end up with that fight or flight moment, those sorts of things that you need to look at. So an example, you have an example with the belief. A person has a balanced approach to their investing. They like moderate growth. They value the short-term gains and long-term gains. Stability, both are just as important. And they value the strategy with discipline, patience, and definitely emotional control, because everyone should have emotional control. Their preference is technical analysis. So different types of your technical analysis, which gives them structured focus, and they're able to do their trades with risk and reward, exit entry points, that sort of thing. So once they've set their clear profit targets, stop loss levels, they have their risk tolerance, which is individual for each individual person, and they've assessed the market as it is. Their profit reaches the levels that they're supposed to, stop loss levels, and they exit their plan according to exactly what it's meant to be. They have no emotion, it is just follow the plan. But then we have our personal trading philosophy, and that is more individual. That's more what we think is important ourselves, what suits us. So with our methodology, okay, we might say technical analysis, and we might say, let's look at trends, but how do we look at trends? What exactly do we look at? We have our own unique beliefs as well, our attitudes, our preferences, what goals we have. My goal is different to another person's goal. You know, whether we want that quick fix, that quick profit, what do we value? Do we value learning, or do we value making money? It's important that not all influences are trading related. There's things from outside of trading that actually does come in to our trading mindset, and that's pretty much what's going to be in the next session as well. When we look at how a person approaches all aspects of their trading, so that's not just their general methodology, but it's also, you know, if you have a preference, or if you have a value and a belief for the ecosystem and global warming, say, you will actually perhaps prefer those sorts of things over a different type of asset that you might look at. Or if you have different goals as far as financials, if you have kids, if you have a family, you might have a different goal to other people who don't. And our personal experiences. So if we've had a really, really bad time with something previously, then those sorts of things are actually going to affect us in our philosophy and how we approach things. So when things go wrong, our personal beliefs. So our personal beliefs are those things that are external. They're those things that I was talking about that were not necessarily trading related. They can give us or make us have that emotional decision making. Things that if we have a bias, then we can perhaps look at things differently. We can, if we are emotional, if we have a personal belief, then we can actually do more emotional trading. With the deviation from strategy, again, same thing. If we have some sort of personal belief that we need to achieve something in particular, we can actually deviate from our strategy simply to achieve whatever that belief is. Bias interpretation of information. That's pretty much says what it is. It's when we look at information and we want it to say something, so we allow it to say that, and that's what we take in. In those instances, we can override our risk management strategies and just ignore them, so we can try and alleviate those personal beliefs that we have. They can create stress and anxiety and inconsistency in results, but also in our decisions and also our trading behaviors in general. We can lose objectivity, and it can cause some psychological strain, which then causes that stress and anxiety. It causes that fight or flight. Emotional dissonance is when we have a discrepancy between our emotions. So we feel like we need to do something, but we do something completely different, which causes an issue with our emotions. It actually doesn't, it kind of doesn't make sense now, but it will next week or next month. Failure to launch. But I call failure to launch that one where you hold back and you just can't bring yourself to go live. You know it's there, but you just want to see it play out that one last time just to see if you're right. Health problems is your mental health and your physical health, and difficulty learning and adapting. That's whether you are willing to accept that maybe you need to review what you're doing. Are you wrong? A lot of people don't want to know they're wrong. So a mismatch and a misalignment between them can cause a problem. So you can have a great philosophy, you can have a great methodology, but your behavior doesn't match. So what can go wrong? Your personal beliefs, when your methodology and your philosophy don't match, but when your behavior also doesn't follow the philosophy or the methodology. So, an example. So, all going well, you would have a person say with that opinion that they're going to have the moderate growth, capital preservation, and they have the opinion that losses are a part of the process and learning opportunities. Their personal philosophy is that they understand their own financial situation and limitations at this point in time, and they trade accordingly. They know that they have particular issues, and they look at their risk management strategies based on that sort of self-awareness. With the methodology itself, that's based on both of the personal trading philosophy and the trading philosophy. This person in particular prefers technical analysis. In this, they identify their trade setups with their entry and exit points, position sizes. They know that they have some emotional issues, so they consider their state of mind at the time when they go into their trade. In their behavior is they set their goals, they set their profit targets, they do their routine that helps them regulate their emotions and make sure that they're not trading based on their emotional decisions, and they execute their trade based on the plan without any deviations. Their trade plays out as they predict, and they execute it as they have planned. They take their profits and then they review what they perhaps have done wrong for personal development in the future. When there is a mismatch, the difference is their philosophy and their methodology might be the same, but there you go. Sorry about that. They have a personal belief that comes into their philosophy. They have a fear of failure, that any loss is a failure. And with that loss, that means that they're not as good as other people. So even though they still have all of the same methodology, they still have everything the same, they are driven by those fears. And as a result, they have doubt because they want profit, but they also have a fear of loss. They have that impulsive trading for the fear of missing out. So they don't want to miss out, but at the same time, they don't want to lose money. And when the market fluctuations happen, they exit early after they've bought, and they end up losing money. So they miss out on their profit, and they miss out on an opportunity. So it's a loss in profit and a loss in opportunity, which then becomes a failure. And that is then they're not as good as other people. And that reinforces then those beliefs that they had previously. So these, based on that, other things that can happen. So you can have the early exit from trades, fear of missing out, holding on for dear life, or fear of doing anything. You can have that paralysis or the overtrading. Self-awareness is the key to all of that. And the first step is identifying what your trading philosophy is. The second is really finding out what those damaging personal beliefs are. And I have two assessments or one assessment at the moment for this time, that is to look at what your trading philosophy is. So there is a questionnaire that I will give Parker, and I suppose he can give out to people. It goes through a lot of different aspects of trading to find out where you fit and where you believe you are with all of those aspects. And then it comes into, I have also put the interpretation. So when you've scored it, and the actual forms themselves actually have a bit more explanation. The different scoring for different things, where you sit within that, perhaps what you need to look at to maybe improve where you are. And then from there, next week, I'm going to do a live session with Benjamin and show you the laddering technique that I use to find those personal damaging beliefs that can cause so many issues. So that's pretty much it for me. That was all I was doing today, was just telling you what it was about and providing you with the questionnaire. And I will let you think about that. Obviously, it is quite a long one, and it is up to you whether you want to do anything with it or not. If you don't take it any further or don't do anything from here, then that is also up to you. But to know your philosophy and to know where you are in the big scheme of things is the first step to then finding out the beliefs that are causing you problems. Yeah, so I will pass them on to Parker, and people can take them and do what they like. Are there any questions?
Yeah, any questions for Katie?
Admirable work in the presentation.
What was that? Sorry.
Some admirable work in the slideshow presentation.
Absolutely brilliant, top class, world class, or as always. Kim is saying thanks for these early insights, Katie. San is saying that was great, thank you. Yeah, this is really outstanding, unparalleled, and never seen before. Kerry is such, when she presents, all become awful. I don't know what the exact English is. But any questions to Kerry? You have much time now. You can ask any question. Never think that if you are approaching Kerry personally or through us at kerrybrown@nfinancials.com.au, never think ever that she will be discussing your personal challenges in trading. All of us, including me, Marty, Ben, everyone are having challenges, are having opportunities. Never think that Kerry would be discussing that with Benjamin, Ben, or with me, or with any member of NP Financial. Never she would do that, because that is against the ethical thing.
I have professional legislation and rules that actually say that I can't. I mean, not that I would anyway, but even if there's a question that somebody wants, like I know psychology can be quite frightening, and a lot of people don't want to actually admit that they feel a particular way. And that's fine. I'm in a really, really small community, and that's something that I deal with all the time with my clients, is I don't want other people to know what you're thinking and feeling. And if there are any questions at all, I don't necessarily need to say who they're from. I don't even need to say that there's a question. I can actually just incorporate it into something that I do. The question earlier is definitely, it does come into that philosophy with the difference between Forex and stock isn't necessarily the mindset, but more the how long do you necessarily want to say wait for profits? How much money do you have? How much risk are you willing to take? There's a lot of difference between the actual assets themselves. So that is probably more what the issue is, what the difference is, than the actual mindset itself. That makes sense.
Absolutely, very well said. Absolutely. Gautam, do you have any question to carry on that question?
No, all good. I think she has sharpened my understanding a bit of that. So yeah, I'll probably think along those lines. Yeah, you see. Yeah.
Brilliant, fantastic. Thank you, Gautam. The way Kerry presented the trading philosophy, personal trading philosophy, methodology, and behavior, and how a mismatch can cause trading errors, I have never seen. I've never seen in my life in last 13 years that mismatch. We all know the trading philosophy. We all probably have heard of personal trading philosophy. I don't know how many of us have written down, including me. And we all know the methodology. Probably we know a little bit about behavior, but that mismatch the nine blocks which came down, unbelievable, was absolutely to the dot. Brilliant, excellent. We must appreciate the presence of new members like Shreya, Shan. There are many new members today who has joined us. Thank you so very much, and we appreciate your questions. Those of you who have not asked questions so far, You can ask questions to me or Marty or to Kerry, Sarappreet, Shreya, Sean, Abraham. They are all new, so you can ask any questions. Don't think that I'm asking a foolish like question, or this question does not make any sense. Please ask questions, because we always say at NP Financials, ask questions. Do not suffer in silence.
No question is a stupid question.
Exactly correct. Exactly correct. Especially when we have Kerry within us, you must ask
I,
questions. Go. If you are still thinking of asking questions, you can write Kerry your direct questions at kerrybrown at npfinancials.com.au, or you can type in the question, like Marty did on the PYPL, NASDAQ, SBL, or
I do
FM.
actually have an example of.
Go. So, what's the example, Kerry? Dilkusen says, "Oh, that is a big one. You must read,
Yeah.
Kerry." The
Oh, wow.
San
Okay.
is saying overtrading was a big thing for me, especially because I'm a day trader who uses my M1 charts, 1 minute chart, with short-term high risk and reward trades. But there are day markets goes on same direction through the whole New York session, and I kept trying to take a position towards the opposite direction. So truthful. I really appreciate San's honesty here. This affected me losing challenges, that is auditions, but I then made a rule of to stick with 3 trades per day. That is so brilliant. We say 1 trade per week per currency pair in our 4 hour strategy to protect the equity, and that changed my life when passing the auditions. Maybe Kerry can talk about these two. Kerry, to you.
Well, actually, the example that I have is one of the things that actually talks about is over trading. So it is a client that I have had of mine at work who does do trading, and it's, I don't know, I just hit up any them. Oh, so poor, my poor clients at work. Here we are. So the laddering technique itself is strange because it actually, in the interview itself, you actually have nothing to do with trading itself. In this particular thing, it's pick 3 objects, 2 of which are different and different to the third. So this particular person picked bags and a travel mug. From that, it came to the bags hold a lot of different things. The travel mug only holds one thing. And you know what? That this is completely the person, not me. This is what they consider to be important. So with those bags holding a lot of different things, means that there's more purpose. The other is look at the opposite of that. They've actually said that there's limited use. When we look at what that means to them, so when something is more versatile, it means that they're more useful and they can achieve more. And if it's limited, there's limited opportunities for them. When they're able to do more, the opposite of that, which is really important, to be able to do more means that you have more chance of success. And when you do less, you have less value as a person as well. So and it is really brief because I've done it before and people have gone home and tried to do like one of those, let me try it on my friends kind of thing. So in this example, this sort of tells you from bags and a travel mug that this person has, the more that you do, the more purpose you have. And with that, it's more versatile. The more you're able to achieve and the better your chances are of success. their opposite is if you aren't versatile, then you're not important. You have your limited opportunities, less value, and less success. This then becomes overtrading, impulsive trading, your emotional trading, chasing profits, and your lack of discipline, because the person is trying to, more is better, which isn't the case. Then you're having your 3 is good. Don't go over that. Don't look too much. More is not better. Impulsive trading, you're trying to prove more. You're trying to be more useful. You're trying to overcome the feeling that you have with that. The emotional trading is you put all those emotions that you're feeling about wanting to have more purpose, you want to achieve more, you want to be more successful, and you're trading based on that. Chasing profits because you want to prove yourself, and lack of discipline is that you're just things. So that is a laddering example, very briefly, that I'm going to do on Ben. And I'm going to do it on Ben because it can bring up a lot of different things very, very quickly. And I don't know when to stop with other people. So I need to. At least I know when to stop with him. To some extent, I answer what was the comment that was made before about overtrading, limiting down to 3 trades. Is that sense of what are you feeling underneath that's making you feel that you need to do more? Does that make sense?
Yeah, Sani is saying yes. Thank you for sharing this screen. Brilliant, exceptional, fantastic. This is what is Kerry's magic. And Shreya is asking a question, Kerry. How do you make yourself stick to the rules? I have seen that whenever I take a trade, I have this urge of looking at the charts, profit and loss constantly. And then when I see it going against me, I come out of the trade, even though stop loss is not hit. Any suggestion, please?
There's a lot of suggestions. It does depend on what those underlying beliefs are that are making you exit those trades early. Is it perhaps a fear of loss? Is it perhaps the need to prove yourself? Is it a doubt in your ability? There are so many things that can cause the things in trading that actually have nothing to do with trading. And that's what this laddering thing, the laddering technique, is so good for, is that it actually identifies so many different things that can influence your trading without you realizing it is. And because this will be over 3, that kind of will be at the end. But the next one will be an actual live interview or session with somebody that will actually show you how this particular interview is structured to get these different things. It is very individual, and that's where that individual personalized trading philosophy comes from, because it incorporates all of those individual things for yourself. You may have a family that you need to worry about finances, or you may have a mindset that money is very scarce, so you are always trying to hold on to money. It could be that you've come so far and you've made profits for so long, and then all of a sudden you've made one bad decision that then all of your profits have gone. There are so many different aspects that could actually be creating that issue. it's important to get to those underlying issues, which is really difficult unless you are looking at things one-on-one with a person. I know that probably doesn't help a lot, but it's I'm more than happy to answer some questions if people email me. Does that help at all?
Yep.
Well, yeah, after the questionnaire, because the questionnaire that I'm going to provide does have that interpretation and the scoring. If anyone is interested, or if anyone is wanting a bit more explanation on that themselves, then they're welcome to send me the results, and I'm more than happy to look at how that whole thing fits together, and if there's a trend there that can be looked at. Any other questions?
If we identify issues, Kerry, what's the process in resolving the issues?
That comes later. I can't give you everything all at once.
Is it a simple sort of process to go through?
It can be. Sometimes I actually refer to a lot of people as, it's like when you go to a hotel and there are so many light switches everywhere, and trying to find the right one that's like that big one that turns everything on rather than just the lamps at the side, or it's a matter of finding that big light switch that refers to all of the little bits and pieces that are going on, and finding out the trend and finding out what actually is the biggest cause for all of those little things. So for this person, their main issue really was fear of failure. Fear of failure. They had an issue with value, their own self-value, and they felt that they needed to prove themselves to actually obtain that value. It's so with that, then we look at what type of things do we need to do to help that person not care about what other people think of them, and really what do they need to do to stop comparing themselves to other people and to actually have faith in themselves and believe in themselves. That's the most important thing, is to stop comparing yourself to different people. Does that help?
Yes, very insightful. Thank you.
It depends on what it is with what you can do. I can say to you that you can just disassociate yourself with your emotions. Some people can, some people can't. It takes a lot of practice to be able to do that. Your emotions give you information that the rest of your psychology and your mind doesn't give you. But at the same time, that information, we have to be careful not to react emotionally on it. We need to take that information objectively and use it for what it needs to be. And it takes a lot of practice. And I think practice is the biggest thing.
Absolutely, Kerry. And Gautam says, thanks, Kerry. Very useful session. Fantastic, brilliant. Any other questions to Kerry? We have 6 more minutes. If not, I'll just share, or I don't know whether it is a question or not. I'll just share my peculiar understanding or a peculiar concept, which may or may not. I don't know. It will. I request Kerry to validate it. When we ask, as coaches or mentor to students, do you have a fear of losing money? They would say yes, possibly because we don't have much. So that's the obvious answer, possibly. And then if we say that if we give you $1 million, would you still have that fear of losing money? Then the
Yes,
question, exactly correct. Then the actually answer got I don't know what is it, mix up or something like that. The answer was like that, possibly I'm having a habit of spending money, so I'll possibly spend that money. So my understanding here, or my question here, is it not quite contradictory that if a person who is having possibly $25,000, he or she is having a fear of losing money. If he is having a $1 million, then probably she or he is having a different problem, that she wants that $1 million to go away from her or from him, so that she can spend, or he can spend, so that he or she can land up in 25,000 again. Is that a possibility, Kerry?
absolutely. It's the belief that and the opinion that there is about money. So whether money is scarce, whether money is there to be spent, that is that difference between the belief of I need to say make money from my trading, but that also that personal belief of I need to spend money for a particular reason, which is one of those personal beliefs. There's a reason that they need to spend money. And that is causing one of those mismatches. Is why do they feel that they should be keeping that money, making money, long-term goals, yet at the same time, their behavior is spending the money, not being able to hold on to that money, and the fear of being able to, and not being able to do that. That's one of those mismatches that are in that process.
Top class, world class answer, Kerry. I must appreciate. Brilliant answer. Yeah, fantastic. Yeah, so that's correct. Any last minute questions to anyone? Andy, you would like to add something? I did not answer your third question before I dropped out. Andrew.
Yes, I was curious if you did have time. Still curious about the automation piece. Have you worked out a way to automate entries like the sample setup? And then also, have you ever experimented with different time zones and closing of the bars and daily bars and things like that? Just finding at the moment, some of these signals come at 10 a.m. on a work day, and it can be tricky to catch all of them. So just curious what your experience is like on that.
Yeah, brilliant, Andrew. For the last two questions, the last one was about the time zone, and the prior to that was an automation. As before dropping, I was telling that all these strategies which at NFinancials we share with you are all automatically developed. So all the coding, all the programs are done in the computer, so they come and sit in front of you in the computer screen automatically. So that's a part of automation we have done. And we have myself and Marty especially, I don't know about all of you, have tremendous friendship or whatever it is, acquaintances with people who are doing automation. Yes, at NFinancials we have done it for 3 years, and Marty is very big on automation at times, but he loves his Elliott web, I know. But at the same time, we have seen that people who does robotic trading or non-discretionary trading, they actually are glued more to the computer than we are because of two reasons. First of all, they don't know what the market can do, and second of all, they have all doubt that whether they have done it programmatically same or not, or whether there is a mismatch in Kerry's term between their understanding, their program, and market behavior. So these are the three things for which we have come to a conclusion that, okay, we will do the automation as far as the strategy is concerned, as far as the histogram is concerned, but we will manually come and see and what not to do, apply our knowledge to give a boost to our automation through our discretionary trading. If that answers your question. And the last question is time zone. Don't worry, time zone come this from today. The time zone, you have 2 hours. I understand people going their time commitment, going and attending office from 9 to 5, but you have 6 to 9, a 3 hours window in which the brokers are doing reconciliation of their books. So from 6 to 9 now for next 6 months, Melbourne time, always I speak Melbourne time, I don't know other time, from 6 a.m. to 9 a.m. Or 7 a.m. to 9 a.m. nothing happening much in the marketplace because there is no quote, there is no data. The brokers are doing book reconciliation. So you have 3 hours of time for you to understand the market, understand the strategy, place the trade, limit order or stop order, and then go to the office and enjoy, and again come back and again see that 3 hours. I hope you have enough time in that 3 hours and that time zone. Although we have played with that, we have changed it to Australian time, we have changed it to Greenwich Mean Time, but there is not much of difference. But we prefer, being in Australia, we prefer the broker time must match with our time. My time, Melbourne time, your time, something else, and Marty's time, something else. It must match with our computer clock. That is why we always select that broker time must match with our computer time. But don't worry, we have always have a window of 2-3 hours. During summer, when the daylight saving was on, we were having 9 a.m. to 11 a.m. For next 6 months, we have 7 a.m. to 9 a.m. Definitely 2 hours to place the trade. Did I answer your question, Andrew?
Yeah, I think on my platform, at least at the moment, with daylight savings, maybe it changes, but the daily bar would close at 10 a.m., which would be the same for Melbourne time as well. And that's when we would get the signal. But I don't think we wouldn't be able to place the trade before that, correct?
You can. Some brokers actually, your yes and no, actually depends on the broker. Some brokers like IG, they allow to place the trade even if the market is closed, and some brokers do not allow to place the trade. Go Market sometimes allow, but the new audition platform is possibly not allowing. But I would say 50-50. 50% brokers will allow to place out of market hours. 50% of the brokers will not allow you to place trades out of market hours. So we have the opportunity to change from one broker to other broker.
Yeah, got it. Okay.
Brilliant, excellent. So if you do not have any other questions for Kerry or me or Marty, thank you so very much. Really appreciate Kerry's presentation and Marty's presentation, value addition. And sorry for the dropout for a few seconds. And I wish you all the best for this month. And remember to trade well and risk well and money management well. All right. Thanks a lot. Thank you all. Bye for now. Ben says
Thank
great.
you, Marty.
Thank you all.
Thank you,
Don't
everyone.
forget,
Bye-bye.
Kim
Thanks,
says
Kerry.
thanks for the
Thanks, Marty.
Thank you.
don't
Thank
forget that you can email me if you want to.
Absolutely, all of you can do that. San says thank you.
Bye, guys.
Bye, Marty.